Consider a scenario in which success is all but assured and the concept of losing fades into the past. But hold on, is that really feasible? Is it possible to make money without risk? This video will break down the clever systems that have driven Tesla to the forefront of innovation and reveal a financial strategy that appears to be specifically designed to support the company's upward trajectory. Every element of the puzzle, from Elon Musk's bold vision to the cutting-edge technology transforming industries, points toward our ultimate objective: unleashing riches never before possible. In other words, this video is your golden ticket if you've ever wanted to ride the wave of Tesla's success with an unbreakable guarantee of gains, or if you've ever wondered how to have your cake and eat it too in the world of finance. Get ready to be astounded, educated, and motivated as we explore the world of Tesla profits and a risk-averse approach that has the potential to completely alter the investing landscape. First things first, though, in order to receive updates from Tesla stock news, click the like and subscribe buttons. Now that we have said that, the video can resume. Imagine that you have a 10-year investment horizon in Tesla. What are the chances that you won't make money during that time? That's about as uncommon as seeing a unicorn, really. It's just not going to happen. Much like hoping to find a mermaid in your bathtub. To bet on Tesla not expanding significantly over the next 10 years. Unless the financial landscape is drastically altered by an unforeseen cosmic event. Let us now address the issue that is a major concern. Is it accurate to suggest that there is absolutely no danger of losing money? Just think about this. It's not unthinkable that a world-changing conflict targeting Tesla facilities could occur, even though the chances are about as slim as pigs flying. However, I would require a crystal ball to foresee that outcome. As they say, though, never say never. When it comes to probability and math, those numbers are everything. It's like declaring with absolute certainty that tomorrow won't bring rain when there's a chance you could actually need that umbrella. Therefore, even if we have a great deal of optimism, we are not quite ready to give it a 100% guarantee. But there's still more. Tom, our pal, makes a valid point. He feels fairly certain that the price of Tesla's shares won't drop below what it is now. You're actually taking a fairly conservative stance. It's difficult to believe that even your conservative views are genuinely that conservative. I really like this because it's a realistic model in the middle, and you're really trying to tone down your optimism on the optimistic model. You seem really optimistic when you suggest that these things are certain to occur, yet this kind of gives me the impression that this is the floor. The reason you're able to say that, in my opinion, is that even when you consider all the possible undesirable outcomes, it still performs really well. Now, although we're not totally in agreement with certainty, Tom's cautious optimism makes sense. Herbert, meanwhile, seemed to believe that Tom's conservative represents the modern meaning of moderation. He resembles Gandalf more than anything else in the stock market, firmly positioned to avoid unjustified hostility by taking the middle route. Imagine Tesla dealing with a robot takeover or experiencing a flat tire on the autonomous highway, even in the unlikely event that things go awry. It appears unlikely to disappear completely. We are discussing a business that, even in the presence of a few drops of rain, is able to climb above the storm clouds. Not to be forgotten are the doubters. Some people were passing up possibilities like free ice cream when Tesla's price dropped in the past, but as they say, hindsight is 20/20, and those who wavered might have lost out on an opportunity of a lifetime. Therefore, whether or not Tesla's stock will decline more is not the actual issue. More important is where it will originate. Is the price of a share going to rise sharply from $1,000 or just slightly from $500? The bottom line is that we're all in on making the most of my hard-earned money. Who knows when a lightning strike will occur twice? After all, we're all ears if we see an opportunity that shouts possible tenfold gains in the following 10 years. Furthermore, there's a less than 1% chance that my pocketbook will cry. When will the next golden ticket appear? One may wonder. To be honest, we're not even able to solve the enigma. It might happen tomorrow, or it might take decades. If we're not on the Tesla roller coaster, though, I'd probably be hanging around with the SP 500 bunch in the interim, looking for a nice 10% yearly pat on the back. It resembles a steady-state marathon in which your wallet ambles along, growing by half every 10 years. Not quite the fireworks we were hoping for, but still nice. Let's now look back over our shoulder. Do you recall the last chapter in the SP 500 story? Yes, there was a brief period during which those who held on for dear life for 10 years ended up with somewhat less than they had anticipated. Not hip, huh? So why risk clipping your wings and dancing with the devil? My fave stock is Tesla. Why? Because it functions as your greatest investing dream's guardian angel. Not to mention our distinct tastes and shades of financial wisdom. For other people, a size that fits like a glove may be too big or small. It's acceptable if you're not interested in experiencing the excitement of Tesla. In this galaxy of investments, your circumstances Objectives and risk tolerance serve as the North Star. It's like the cool kids arriving at the party a little late, but Tesla is still rocking a 42% institutional ownership. Just a fun little fact. And what do you know? It hasn't even reached its zenith yet. So get ready for when those institutional investors show off their true affection for Tesla. We are discussing some spectacular moves in the stock price. Consider Apple, which is currently hovering around $160. That gives institutional investors a good amount of leeway to purchase additional Tesla stock. The problem is that, as far as prices go, Tesla doesn't quite match the pattern. Looking at the valuation figures is similar to comparing apples and oranges. Apple has a price-to-sales ratio of 4.5 and a P/E ratio of about 24. In contrast, Tesla is valued at a completely different level. The worst part is that it's difficult for people to identify Tesla as an AR play, chiefly due to their reputation for producing automobiles. As an automotive company and an AR player wrapping their minds around Tesla is like to attempting to stroke your tummy and pat your head at the same time. It presents a challenge. Let's now discuss why an AR-focused startup seems to have more value enthusiasm than Tesla. Institutional investors have historically expressed skepticism towards Tesla. They like businesses with strong succession plans and share buyback programs. However, Tesla doesn't quite follow those guidelines. Furthermore, what do you know? On this, Elon and I agree. When there are better uses for valuable capital than buybacks, why squander it? Not to be overlooked is the crucial man risk. That is akin to placing all of your eggs in a single Elon Musk basket. However, that's a risk that many of us Tesla enthusiasts are willing to take. Let's go for the long haul now. It will be like unwrapping a treasure trove of possibilities when Tesla begins to realize the benefits of its moonshots, such as FSD. Even the most cynical institutional investors won't be able to resist hopping on the Tesla bandwagon when those juicy profits start rolling in. And what do you know? Saying that FSD won't be profitable by then will sound as antiquated as a floppy disk. Do you recall Jim Cramer advising against even renting Tesla stock? That headline really caught my attention. But as it happens, Tesla produces automobiles that function like, well, vehicles. When people realize that Tesla is more than just hype, it's like a fantastic moment. It's a legitimate electric vehicle maker. Furthermore, let's be honest, Tesla has been more like a roller coaster with magnificent climbs interspersed with heart-stopping dives. Recall their statements that a larger Model 3 will eat its brothers, or that Tesla shouldn't attempt mass-market automobiles. Yes, it turned out that the public enjoyed it, and the stock of Tesla increased along with their electric cars. And what do you know? Nothing will be different the next time. History has shown us that Tesla's revelations frequently cause the doubters to retract their statements. It has a suspenseful cinematic plot that never lets up. And we're all in for the journey, myself included. In conclusion, keep in mind that every investor's journey is different. Your path is determined by your circumstances, risk tolerance, and aspirations. Here's to risk-taking and prosperous financial prospects, regardless of whether you share our ardent love for Tesla or are just starting off. That's it for now, people. We've explored the Tesla cosmos in great detail and uncovered some fascinating revelations. Now, I'm interested to know how you feel about all this hype over Tesla. Do you have reservations about joining the Tesla bandwagon, or are you eager to do so? Perhaps. You're already in control and seeing those electric visions come to pass. Let's continue the discussion in the comments section below. Please share your thoughts on Tesla's development, its prospects, and any queries that came up in our conversation. Giving this video a thumbs up would be great if you thought it was as insightful as we did. And hey, check out Tesla Stock News if you haven't already subscribed for more. We appreciate your time, and we'll see you in our upcoming video.